Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, the first week of December, in which we got a lot of data on the economic side, and it was the week of labor. ISM, jobs, unemployment, non-farm payrolls, ADP employment, a lot of data in terms of labor market, which provide us and the Fed with enough signs of labor cooling down. We are going to review all this economic data and also review all the nuances of the week on the technical analysis side for you to gather all the information and prepare for next week, because I'm going to share with you a lot of details to, I think, convince you about why the next week is so important in getting to all-time highs. Next week, we have CPI data and FOMC interest rate decision, and we got a pretty wild end of the week this week. And I think smart money, big money, are prepared for the all-time highs. But first, let's start with the economic data. Monday, we got factory orders on the negative. That's good. But the big one starting on Thursday was the ISM services PMI and jobs opening. ISM continue above 50, meaning that it's expanding a little bit higher than expected. So this caused a little bit of trouble on the markets. But the big one was jobs job openings. Look at this, really crashing to the downside. We were expecting 9.3 million and we got way lower. And this provides the first sign of labor market cooling down. On Tuesday, we got really decent price action, and we are going to see on the charts that every single day of the week, we were trying to go lower and we push down and we push up. We tried the next day, gapping down, moving lower, and then we push up. And all these things were basically on higher lows. So that's the key to understand this week, because this week is choppy, but I'm going to provide you why. I'm going to share with you why you have to be more bullish than bearish. We got also, sorry about that, we got on Wednesday, we got the NBA 30-year mortgages rate really pushing lower, 7.17 from 7.37. Look at the applications, 2.8. Look at the refinance, 3.73. People are really loving these low 30-year mortgage rates. The big one was ADP employment, way lower than expected, even lower than the 1.6K. In the previous one, we were expecting 130,000. So really another sign of labor cool down in terms of private employment. And look at this, non-farm productivity spiking higher, 5.2, even higher than the 4.9 expected, and labor cost going lower. And let me tell you, this ADP employment change also a check, and these two, Wall Street love these two. Higher productivity on lower labor cost, it's a 10 for Wall Street. What else? Thursday. And Thursday, as always, initial jobless claims and continued jobless claims. Initial jobless claims are a little bit lower than expected, but higher than the previous one. And continued jobless claims way lower. And this was a check. This was a little bit of a bump, but remember that was Thursday and we were already hyped on the week. And on Friday, the big day, Friday, non-farm payrolls, 199. Big push on payrolls. Unemployment rate, 3.7, going lower than expected. And this is why we have to really pay attention on what the data was and what the price action was doing. For now, take the NFP. I think this was a big miss, and unemployment rate was a big miss. This is for inflation. But for recession avoided. Non-farm payrolls, it's barely a miss, but unemployment is a really big hit. And I think the key to understand what is happening is that people is no longer looking for inflation, looking for cuts next year, but the focus is avoiding recession, getting the soft landing that everyone is thinking about. Apart from NFP, we got also Michigan consumer sentiment. This is a preliminary, so be careful with that. But still, look at this. 69 expected 62. And look at this 5-year inflation and the inflation expectation in general. 2.8 from 3.2 and 3.1 for 4.5. This was unbelievable. People are thinking that inflation, it's over. Inflation is over. So this is the data that was coming this week. And remember, Thursday and Friday were the key days to really understand the sentiment on the big money, not on the retail sale. I'm a volume profile, volume trader, and I'm going to show you why the price action and the smart money flow, the order flow of these 2 days, Thursday and Friday, why they are so bullish. But first, a little bit of interest rate decision. On Thursday, on Friday, we got the NFP. So we moved from here to here. That's the only change on the week. The cuts are starting on March. The rest is the same. Expectations are 1, 2, 3, 4, and 5 interest rate cuts next year. And finally, news from Google. Google's shares popped 5%, I think it was on Wednesday, after the company announces Gemini AI model. And the key is this. They say that Gemini, or whatever it's called, outperforms GPT 3.5 and also its high performance on GPT-4. They didn't provide data to support that claim, but Google were crashing. Google were carrying the market, the entire market, and the last part of the week. Now that we cover everything in terms of fundamental, let's go to the charts. And the chart, as always, on the weekly recap, we start with the weekly. Pay attention to this weekly fair value gap. And this week on the weekly, it's super bullish. We are going to see on the lower time frames, for example, on the daily, that we got this daily fair value gap, and look at all these weeks. This is what I was waiting for. And now that we tapped, for example, on Monday, we tap on Monday a big part of the week and we rejected. That was the key for me to be super bullish this week. And don't forget about the order blocks here in case we retrace lower. I don't want market to retest this order block, but I wouldn't mind to retest this one. But now that we have this wick down here at almost half deep retracement for the fair value gap, if you saw my Monday video, I missed this trade by 2 points on the fifth retracement. I was waiting for this to buy, and oh boy, I missed that. But if you're interested in seeing that, just check my Monday's video because it's quite frustrating. But well, it is what it is. But the thing is that look at this end of the week, Thursday and Friday. And this Wednesday, despite the fact that it's a bottoming, it's a inverted hammer red candle, we just did this. So let's see that. But we are respecting the weekly, we are respecting the daily fair value gaps. And let me tell you something, because on the 4 hour, we are also respecting that, And we took this liquidity here. We took that on Monday. This is Monday. We put this week and we pushed. On Thursday, we were down pre-market and we pushed. And on Friday, non-farm payrolls put a nice trap for shorts and we pushed. This is what you have to see. Not the red pushes and the failure from shorts to move price action out of the fair value gap to the downside. This is what you need to understand. And we have still open liquidity down here, but I don't expect market to move lower. I expect market to really, I think there's a 1 hour, yeah, it is here. So this is the 1 hour. We are going time frame from time frame, going deeper. So you see this. And basically on Thursday, once we got data, I was expecting this. We crashed this liquidity up here into the close. And on Friday, we were still respecting this one fair value gap, inverted fair value gap, 1 hour. And I was a little bit concerned about these weeks that are not pushing higher. So that's why on Friday, my strategy, check my yesterday's video, but I'm going to recap that. My strategy on Friday was, okay, we have this liquidity and we have this other liquidity that is quite important because it's double top. There's a lot of liquidity resting up here. And then we have the big kahuna one at 16,028. So if we go to the 30-minute chart, we got this, and let me explain you how you can get this entry. Because on the 1 hour chart, there's an inverted fair value gap here. And on the 30-minute chart, there's, sorry, it's not inverted, it's regular bullish. It's this fair value gap on the 30-minute. So a little bit bullish, right? We go to the 5-minute and we can start seeing this. We tap Thursday high, sorry, Thursday low. It was this low here. We tapped that one and we moved higher. And how can you take this? Well, I didn't take this. As you can see, I took this trade. And this trade was based on, okay, we just took this liquidity. We didn't take this liquidity, but look at this rejection from the liquidity lower. I was watching this as a target, but first the high of pre-market at this liquidity up here. So I'm going to review that. Yesterday I reviewed the trade, but look at this. 55 points on the NFP, retest of the fair value gap. The nice entry was down here, but anyway, I took the retest of the inverted fair value gap into this liquidity up here. So once market opened, we started chopping around, but this is what they do on NFP day. NFP day, it's a highly manipulative day that everyone is chopping around but them. But look at this. And this is why you have to see these kind of things. This is, let's go to the 5-minute. There were 2 fair value gaps on the 5-minute that are being respected. Another big one here that was the confirmation. So we can remove this. They took these 2 liquidity, sell side liquidity, and they did this displacement. And this is how high frequency trading algorithmic price action looks like. Look at this. This is algos. This is not natural price action. This is just algos doing their thing, liquidity injecting, maybe even the Federal Reserve injecting liquidity. Who knows? But this is not natural. This is at 12 at noon, starting into the close. So this is why I'm so bullish. We were respecting on NFP. We took the trade. We chopped everyone around. We displaced to the downside. We displaced to the upside. We took liquidity, and we just started our algos. So this is the reason why liquidity, it's the ICT concepts are so good for order flow. The liquidity was taken towards the end of the day into the power hour of Friday afternoon on an NFP day. This is, I mean, there's literally no one profitable trading these things. So they just start their algos and go home. So it is what it is. So for the forecast, after this rejection lower, after all these weeks on the fair value gap, and these 2 days on the end of the week, I'm super bullish towards all-time highs, or at least high of the year at 16,200. So what do we have on the 1 hour? Well, I have already charted this liquidity up here. It's pretty damn visual. There's nothing here. So I wouldn't mind if we just gap up on Monday. I'm expecting this 1 hour to cause a little bit of trouble, but if we just start ripping higher, this is so bullish. I mean, I'm all about pushing this level before FOMC. They will push to critical levels before key days like that. FOMC, CPI, it's that. So my forecast is just bullishness and bullishness and bullishness. So even though we have these inverted fair value gaps, I think if we move to we have this 1 hour that needs to be respected for sure. So that 1 hour, the 30-minute, there's nothing clear. Look at this. How efficient is this? There's nothing on the 30. There's nothing on the 15. There's nothing on the 5. Only this thing, but I don't think. Order block, but the only one that I'm interested is this one. So perhaps for deep buy, this one on the 5-minute is the only one interesting. But for the other ones, I just need to see this 1 hour being respected. So this 1 hour needs to be respected. And if not, I might buy the dip on the 5-minute or a deep buy into pre-market Monday. This is an order block, and it's quite a big one, and this needs to be respected. I don't want this order block to be touched, and I will remain bullish. If we touch this and start going deeper and deeper and deeper into this 1 hour, I will just reassess my bias, because I think we are no longer as bullish as I would like. So that's my forecast for the price action on Monday and for the rest of the week. We are so near this, and we were so bullish at the end, and we have all these weeks respecting fair value gap. I mean, it's quite clear for me that the order flow is prepared for year-to-date highs. In terms of individual stocks, well, they were not so bullish as the equity index, but they are showing, Apple is showing that it wants all-time highs at 198.23. Microsoft, a little bit of weakness after going higher and higher and higher on the all-time highs. We are just consolidating a little bit of bullishness. This is key. If we enter this space I think Microsoft is going to test all-time highs. Tesla with the strikes is just in their own world, in its own world. So be careful with Tesla. Being here at 4 in this zone is quite bullish. Amazon quite volatile also due to Christmas holidays and all the, the money spending, the consumer spending. Look at this big green, big red, big green, and everything is going higher. So Google with the Gemini leaving a gap behind on the 5% day, retracing a little bit because analysts and engineers are waiting for data, but we don't get data supporting the claim. So a little bit sketchy. Nvidia, big day to the downside due to AI chips and the US law. So Nvidia needs to reclaim this zone in order to retest AI, the all-time highs AI. And Meta, super bullish. Meta is super bullish. We went out of this range with a big 2 red green candles closing at the top. So I can see Meta 340 again. And after Nasdaq, after individual tech stocks, dollar, we got this order block on the daily that was quite bullish. We respected that at the end of the previous week, and this week we've been pushing higher and higher. Monday, Tuesday, Wednesday, a little bit of retracement, but we are still in this below all this range that is acting as resistance for these weeks. So remember that if dollar continues lower, we might see higher Nasdaq and S&P 500. If dollar goes higher, we will see weaker equity stock market. And finally, the thing that I want to review is small caps. Small caps were crashing last week, a little bit of horizontal consolidation and finishing the week at least near this. So this is still bullish. I can still see small caps and Russell 2000 really pushing higher. On the Friday, look at the bank's performance. 3%, 1, 1, 1, 1, 2, 1, 1. So really, I think it's quite bullish. And I think that's all. So the forecast is quite clear. You have everything you need to know to be prepared for next week. You have my analysis, my bias in terms of next week. I think we are going to retest this buy side liquidity, and it is what it is. Just get information, factual data like this one, analyze, assess all the data, and really make your bias for next week. I'm trying to help you to understand what happened this week and why it happened. So that's why I do these weekly recaps. And I would really appreciate you to really put in the comments down below if you want to see more fundamental analysis, more technical analysis, or more ICT concepts towards my trade setups. I'm trying to include in the daily videos the trading setups that I took for you to see that they work. So please tell me what kind of content you want to see on 2024. I'm trying to include and reassess the kind of content that I do. And I need your help to really tell me, I like the fundamental review, I like the technical analysis, I like the trading setups, ICT concepts. Just tell me what you need, and I will try to include that for 2024 content. So that's all from my side. As always, thank you for your time. If you found this kind of weekly recap videos useful, please give it a like, subscribe to the channel, because I do these kind of videos every week on Saturdays and also on trading days, Monday to Friday. I do daily stock market recaps. So thank you for all the support, the people subscribing, the views, and tell me down below what you need and what you want to see for 2024. I would really appreciate that. And as always, review your trading, review your charts, prepare for next week. That's how you are successful. And also, discipline and risk management are key for your trading career. Thank you, everyone. Stay safe. Have a nice weekend and see you on Monday.